For centuries, money has been more than coins and notes. It has been power, strategy, and survival. And nowhere is that more evident than in the story of Europe's great banking families, dynasties who operated not just as lenders, but as architects of politics, war, and empire. Behind monarchs and generals, in the shadows of parliaments and palaces, stood financiers whose names became synonymous with influence. Their legacy is so deeply woven into our global financial system that traces of it remain everywhere today, from central banks to international markets. The story begins in the medieval marketplaces of Italy, where money changers sat on benches, banca, giving us the word bank. Families like the Medici of Florence perfected the art of finance long before Europe had stock markets or modern currency. They realized lending wasn't just a business, it was a pathway to power. By financing kings, popes, and wars, they positioned themselves as indispensable. Cosimo de' Medici was once called the father of the fatherland, not because he held office, but because he held the purse strings of Florence and much of Europe. His descendants turned wealth into politics, ruling Tuscany for centuries, but the Medici were only the beginning. As trade expanded across Europe and into the New World, new families rose. The Fuggers of Augsburg in the 16th century became bankers to emperors. Jakob Fugger, known as the Rich, financed the Habsburgs, enabling Charles V to become Holy Roman Emperor. With mines, trade routes, and lending, the Fuggers were richer than many kingdoms. Yet their fortune, though vast, eventually declined. The stage was left open for others. By the late 18th and early 19th centuries, one family rose above all others, the Rothschilds. They began in Frankfurt's Jewish ghetto, where Mayer Amschel Rothschild established himself as a banker to local princes. But Mayer had a vision bigger than Frankfurt. He placed each of his 5 sons in a different European capital: Frankfurt, Vienna, Naples, Paris, and London. What he created wasn't just a family, but a multinational banking network at a time when communication was slow, risky, and unreliable. While others relied on messengers and rumors, the Rothschilds built private couriers, coded letters, and information channels that gave them an edge in markets and politics. Their breakthrough came during the Napoleonic Wars. Wars are expensive, and governments always need money. The Rothschilds specialized in moving gold and financing armies. Nathan Rothschild, based in London, famously managed to supply Wellington's army in the fight against Napoleon. When the Battle of Waterloo ended, Nathan had couriers deliver the news before anyone else. While the legend that he manipulated markets that day is exaggerated, the truth remains. Information and capital made the Rothschilds indispensable. Governments trusted them not just with money, but with secrets. From then on, the Rothschilds became a financial empire. They financed railways, mines, and infrastructure across Europe. They lent to monarchs and republics alike. They helped Britain buy the Suez Canal, giving it control over the vital waterway to India. At their peak, they were arguably the most powerful private bankers the world had ever seen. Their wealth wasn't simply about luxury. Though they built palaces and collected art, it was about influence. They shaped policy, diplomacy, and war without needing to sit on any throne. But the Rothschilds weren't alone. Other dynasties, like the Barings in Britain, wielded enormous power. Baring Brothers Bank financed trade and empire, so much so that when it nearly collapsed in the 1890s after risky investments in Argentina, the entire financial system trembled. The Bank of England had to organize a rescue to prevent disaster. The lesson was clear. The fate of nations could hinge on the decisions of a few powerful financiers. In France, the Pereires brothers, Jewish financiers who rivaled the Rothschilds, backed railways and industry during the 19th century. They championed a more industrial vision of banking compared to the Rothschilds' conservative approach. Although they eventually lost in direct competition, their story showed how banking dynasties didn't just accumulate wealth, they battled for influence, shaping economies in different directions. What made these families so powerful wasn't only their money, but their networks. In an era before central banks had real authority, governments had to turn to private bankers. Need to pay soldiers abroad? Borrow to rebuild after war? Fund a massive project? A king could summon a banker with a signature that carried more weight than treaties. In a way, these financiers became the invisible balance of power in Europe. Critics often saw them as secret rulers, manipulating events from behind the curtain. Anti-Semitic conspiracy theories targeted families like the Rothschilds, exaggerating their influence into myths of global control. The truth was more complex. They were powerful, yes, but not omnipotent. They operated in a world of monarchs, revolutions, and shifting empires. Sometimes they were on the winning side, sometimes not. But their ability to survive political upheavals, unlike many aristocrats, showed the resilience of financial power compared to dynastic thrones. By the 20th century, the role of these dynasties began to change. Central banks rose to prominence, governments took a stronger role in monetary policy, and wars became so vast that private bankers alone couldn't finance them. Yet the legacy of these families endured. They laid the foundations for modern finance, international networks, private intelligence, and the idea that credit can shape history. Even today, the Rothschild name carries weight. Though their wealth is no longer what it was in the 19th century, they remain influential in investment banking and asset management. Other banking families, like the Lazards, still play roles in global finance. Their direct political influence may have waned. But the system they pioneered, where money moves across borders faster than armies, defines the modern economy. The question is, did these families build Europe, or did they simply serve it? Without their loans, could wars have lasted as long? Could empires have expanded so far? Would industrialization have moved at the same pace without financiers pushing railways, canals, and factories? In truth, their power lay in enabling. They gave rulers options, they gave merchants capital, they gave nations lifelines, and in doing so, they became indispensable. Think of the 19th century world. Railways snaking across continents, steamships connecting oceans, telegraphs carrying information at lightning speed. Behind much of it were bankers. They were the ones who turned risky visions into funded projects. They weren't inventors or generals, but without them, inventors lacked capital and generals lacked armies. This is why banking families have often been described as hidden hands in history, not because they pulled every string, but because they provided the thread from which history was stitched. Their secrecy added to the mystique. Private letters, coded messages, closed doors. All of it fueled the perception of conspiracies. And while myth and fact often blurred, one truth remained: money moves empires. Modern Europe, with its stock exchanges, multinational corporations, and supranational institutions, stands on the shoulders of these dynasties. The European Union's financial systems, the dominance of London and Frankfurt as banking hubs, even the structure of central banks, all are legacies of the world these families shaped. They professionalized banking, globalized capital, and normalized the idea that finance could be more powerful than feudal land or royal decree. It's also worth remembering that their rise often came during times of crisis: wars, revolutions, financial collapses. These were opportunities for bankers willing to take risks when others hesitate. When kings faced bankruptcy, when states teetered on default, it was financiers who stepped in. They didn't just profit, they stabilized, at least enough to keep the system alive. Sometimes they failed, and the fallout was severe, but often they succeeded, and their rewards were vast. In the popular imagination, this mix of wealth, secrecy, and influence turned banking families into near mythical figures. Cartoons depicted them as puppet masters, while writers spun tales of hidden empires. The reality was less glamorous and more practical: ledgers, contracts, negotiation, and relentless risk-taking. But perhaps that's what made them so remarkable. They transformed numbers on parchment into armies in the field, tracks on the ground, and ships at sea. Today, when we look at financial headlines, crises in sovereign debt, questions about global currency, debates over who really holds power, we're echoing old questions. Who controls credit? Who decides risk? Who benefits when nations borrow? The answers may no longer rest with single families, but the system they helped create endures. The secret banking families of Europe remind us that history isn't just written by kings and generals. It's also written in ledgers, contracts, and balance sheets. Money is never neutral. It carries the weight of choices, risks, and power. And while their names may no longer command the awe they once did, the shadows they cast stretch across centuries. In the end, their story is less about secrecy and more about continuity. They bridged medieval markets and modern finance. They showed that power could be measured not just in land or armies, but in liquidity and trust. And they proved that sometimes the most influential people in history are the ones whose portraits never hung in royal halls, but whose signatures decided the fate of nations.